There is still a long way to go because there are a lot of institutions that you need to bring on chain. And I mean, frankly, Canton is, one of the only ways that we've seen of actually being able to convince these guys that it's safe to move on chain.
Alrighty, everybody, what is going on? Welcome back to another CYPRX video breakdown. We are entering into an era of real-world utility and not digital asset speculation and hype. What caught my attention and pushed me to dig deeper in today's video breakdown wasn't price, it was infrastructure. Quiet pilots, regulated settlement, 24/7 tokenized deposits. And so in today's video breakdown, I want to show you what is actually being built behind the scenes on the Canton network and why institutions and organizations like the DTCC and digital asset matter, and what even led me to doing this research in the first place. If you care about where the financial system is going, not narratives, then stay with me, because today's video breakdown is going to be an excessively deep dive on everything that's happening behind the scenes and why I'm even doing this research. Now, right off the bat, the examples, the influencers, comments, and posts that we might cover in today's video breakdown, I need you guys to know that this is a research-based video. This is not I'm attacking any other blockchain or saying that one of them is going to rule and the other ones aren't. I'm just showing you guys information that is readily available to anybody that wants to go and find it. And what made me question certain narratives and even things that I'm doing in my own personal portfolio. Now, another thing that I need to say right off the bat, because I'm going to be comparing and bringing up some Ripple commentary, XRP is still personally my biggest investment. It is my biggest bag. It is the biggest investment in my crypto portfolio, considering that I got into XRP when it was sub 27, in even some cases sub 11 cents. And that's not going to change anytime soon. So I needed that to be said right off the bat, because a lot of people will say, oh, you're doing research on Canton now and this, and that. Anybody that has been a follower of CYPRX knows that we have been covering Ripple and XRP since 2016, 2017 era. The same feeling that I'm getting about Canton Network is the same feeling that I got back in the early days when I discovered XRP back in 2016. And so now showing you guys why I'm even and started doing this research on Canton. Now, I started doing this research on Canton. There's timestamps in our private CYPRX Discord from 2023 where I first started digging into Canton Network. But let me actually show you guys what solidified that the research that I'm doing was in the right place. And it actually starts with Ripple themselves. Where just the other day, I believe this was January 15th, 2026, Ripple made an announcement. You can see that here. Today, our partners at BNY Global launched tokenized deposit services for institutional clients, bringing the promise of digital assets directly into the banking system, with Ripple Prime as an early adopter of this technology. Noel Kimmel, the president of Ripple Prime, even said, as more traditional financial institutions move into digital native services in 2026, BNY is staying ahead of the curve, bringing digital assets directly into the banking system. We are proud to expand our long-standing strategic collaboration now as an early adopter of BNY's tokenized deposit services through its digital assets platform. So Ripple is going to be utilizing and adopting this digital asset platform from BNY Mellon. And in this entire elaborate post, I showed you guys how this has everything to do with Canton Network. As you guys can see, this is directly from a document from BNY themselves. And it goes on to say right here in the document how it works. Phase 1, clients and fund companies will interact with Liquidity Direct in the manner that they do today to also invest in and or redeem tokenized share classes via Liquidity Direct, which will have mirrored copies on the blockchain via the GSDAP, or Goldman Sachs Digital Asset Platform. Liquidity Direct's blockchain connectivity layer, managed by BNY's digital asset platform, consumes mirrored information from Liquidity Direct and provides that through BNY DAP onto a blockchain platform that can be internal or from a third party. In phase one, this will be a private permission third-party blockchain platform, i.e. the GSDAP. And we know, again, in this post that I shared for you guys, the GSDAP runs directly on Canton Network. Here again, this is directly from BNY, and it says, BNY will employ blockchain technology developed by Goldman Sachs to maintain a record of customers' ownership of select money market funds. This combined solution marks the first time in the US that fund managers, I repeat again, the first time in the US that fund managers have enabled subscriptions for shares of their money market fund via BNY's liquidity direct and digital asset platforms, the corresponding value of which will be represented through mirrored recognized tokenization utilizing GSDAP. Integration with BNY's digital asset platform mirrors tokens of the money market fund shares, and they are created on GSDAP, an award-winning technology platform developed by Goldman Sachs, which leverages solutions developed by Digital Asset. And this is coming directly from goldmansachs.com. If you come over here, it specifically says Goldman Sachs Digital Asset Platform natively runs on the Canton network. So what made me start questioning some narratives is that Ripple, again, is choosing to use BNY's digital asset platform. They're an early adopter, and BNY's digital asset platform, I just showed you guys, mirrors the GSDAP, and the GSDAP runs on Canton network. So collectively speaking, Ripple chose to adopt technology that underlies on the Canton network, which made me start questioning things. Not questioning things in a negative way, but really just starting to dig a little bit deeper to really get to the bottom of infrastructure. Again, this isn't infrastructure research. Now, that doesn't mean that I don't believe in Ripple and anything they're doing. I still think that they're a phenomenal company and organization, and I'm still stacking more XRP because I believe in the long-term valuation of the digital asset itself and the longevity of Ripple, the company and organization, and what they're doing in this space. This is not a comparison video. I'm just showing you guys to start off this research video why I even started questioning things, because Ripple themselves are literally choosing to be early adopters of technology that sits on Canton. Can't ignore that. It's in the research. It's in the infrastructure. Next, we come over here. Yellow Card, if you guys don't know about this organization. Yellow Card is the largest and first licensed stablecoin payments orchestrator, empowering businesses across emerging markets with international payments, treasury management, and USD liquidity. If you come to their about, you click on their profile and you go directly to their website. So let's go to their website. The operating system for modern money movement. They are backed by Visa. They're backed by PayPal. They're backed by Western Union. They also have 106 plus tier one banking and liquidity partners. They're supported in 35 plus different countries and jurisdictions, and they allow for over 50 plus payment currencies. I'd go outright to say that this is a pretty important organization. It's not just some rando on the internet. So when I heard this directly from the CEO himself, this aligned with my speculation, because he specifically says in this podcast.
But I think that people oversimplify the concept of bringing FX on chain. And there have been a number of companies, even now, there's a number of companies that are trying to bring FX on chain, which sounds great, right? And, you can raise a bunch of money and, everybody loves the idea of bringing FX on chain. But the actual process of doing that involves working with a ton of institutions in a ton of countries that are not going to do this on public blockchains, and they're not going to do it, with assets that they don't have some semblance of control over, right? And I think, this is where a lot of what, Eric and Canton, really helps with, and a lot of where this comes in is as you think about, institutions in these countries that need to be on chain for on-chain FX to truly happen, right? The banks, the telcos, the large corporates, et cetera. Look, we had a call with the C-suite of a bank, one of the largest banks, in emerging markets today. These guys are not going to use a chain that they don't have control over the consensus. They don't have control over the ledger. They don't have control over any of it. Why would they, right? They're a massive bank. Why would they give up that control? And so I think, you need a system where all of these banks have interoperability, but also have control, right? And that's, to me, that's really the magic of what, Canton has built, and why, why I think that like the solution that these guys are working on is really the only way to bring FX on chain, right? I don't think you can actually just issue stable coins for all these different currencies the way that, Tether and Xrpl have. I think the US dollar is a very unique currency in global trade. These other currencies are going to be controlled by banks. These stable coins are going to be controlled by banks. They're going to be controlled by, the financial institutions in each of these countries. And they're going to want, a certain level of control to feel comfortable actually putting this stuff on chain and making this stuff available. And so I think, as you think about FX on chain, there is still a long way to go, because there are a lot of institutions that you need to bring on chain. And I think, frankly, Canton is, one of the only ways that we've seen of actually being able to convince these guys that it's safe to move on chain.
So a lot to unpack there. But again, this is a gentleman, the CEO organization is Chris Maurice of this company called Yellow Card, backed by Visa, PayPal, Western Union, Dunes, Bybit, right? And he just said to you guys, that video breakdown, mind you, okay, look at how many views this has. This just goes to show the lack of research in this space. 597 views. This was uploaded 2 days ago. And he said, Canton is the only network that is actually making these large institutions comfortable moving on chain. He specifically said he had a conversation over the phone with a large bank and institution, and they confirmed that they're not going to be utilizing public blockchains, right? I'm not saying that he's right or wrong. I'm just showing you guys what led me down the rabbit hole on digging deeper into the infrastructure of Canton, okay? Which is why I'm creating this particular video breakdown. So here's that document. This is it's honestly just an opinion piece, if I'm being completely honest. It's the FinTech Times, the World FinTech newspaper. And if you come down here, this was a little tiny segment written by this gentleman here, the Director of Business Development at Epiphany. No idea what that is. Thomas Trepiner. And here's where it goes on to say, just as the DTCC provides settlement for U.S. equities, for example, blockchain-based settlement networks such as Ripple, Roxy, and Copper have the potential to provide near-instant settlement for global fiat currencies and digital assets. So it does say that they have the potential, but let's actually look at the underlying infrastructure and who's being chosen right now. And again, remember, Ripple chose BNY's tokenization platform, which I showed you guys actually runs on the Canton network as the underlying infrastructure provider for that, the technology provider for that. So let's continue to dive a little bit deeper. And let me show you guys how the DTCC is in fact in bed big time with Canton network. We're going to start here. Most of you guys have probably never even heard of the organizations in which I'm going to share with you guys today. And if that's the case, then again, head over to CYPRXtrading.com, tap into our Discord and our research channel where all of this information exists via the CYPRX researchers that share this information on a consistent and updated basis. So Catalyst Blockchain Manager. This is Intellect EU's blockchain manager platform. Infrastructure management for enterprise-ready blockchain applications. For those of you guys who have never heard about this, let's head over to Intellect EU's YouTube channel and run a quick video so you guys have a gist of what the Catalyst Blockchain Manager actually is.
Many organizations realize the benefits of using blockchain technology, but struggle with the very complex and manual processes of setup, maintenance, and management. That's why we built the Catalyst Blockchain Platform, enabling you to easily deploy and manage blockchain networks on any infrastructure, regardless of the use case. Set up your blockchain network through quick and automated processes. No more technical burden and manual scripting. Your developers can now focus on creating value by building next-generation business applications, not maintaining existing ones. Managing your enterprise blockchain network has never been easier. This way, you can innovate faster and continue to disrupt your industry. Easily set up, manage, and maintain your blockchain applications on any infrastructure. Our platform is underpinned by enterprise-grade security, is reliable, and has guaranteed uptime. On top of that, we provide an intuitive user interface and high-quality support plans.
So you guys have a technical understanding of what Catalyst Blockchain is. Now, if we go over to the Catalyst Blockchain Manager LinkedIn profile, I'm just going to start reading thoroughly through documented information. Again, all available to anybody that seeks to find it. Well, just to show you all how serious this is. It says DORA in the EU, and this is posted from 1 week ago. The FDIC third-party guidance in the US and now digital asset standards are going live in Asia as Hong Kong implements the Basel framework for bank crypto asset exposure from January 1st, 2026. The regulator is no longer just asking, is your node up? If you guys remember, we had Sandy Call from Franklin Templeton on a panel discussion go on to mention how these institutions are going to need to run node operations.
Fortunate branding exercises ever was when we started calling them cryptocurrencies, because it created this expectation that somehow they're a currency and they can be spent on things. And you need to understand that it's a way of buying block space on the ledger. That's really the purpose. And so you need to hold these cryptocurrencies in your treasury if you're going to be recording trades on a ledger. And if you're holding these assets in your treasury, you need to figure out what you need to do to hedge against them. And that's when you need to figure out that you need to do node operations. So
finishing this off, it says they are auditing for governance. Who accessed which private key under what policy, and can you prove it with a temper evident log? On Canton network, roles, visibility, and segregation are enforced at the protocol level, and with Catalyst Blockchain Manager, you get the controls, logs, and governance to show that every tokenized deposit lives inside clear, monitorable rails, DORA, Basel, and beyond, run infrastructure that passes the audit. So coming over here to the catalystintellect.com website, I want you guys to focus on these two press room releases. First, we're going to focus on this one, the DASCP framework. Earlier this year, Euroclear, DTCC, Clearstream, and BCG released Building the Digital Asset Securities Ecosystem, introducing the DASCP framework, a comprehensive risk and control framework to foster alignment for digital asset securities. With Catalyst, we aim to empower the digital asset securities, or DAS, ecosystem by streamlining innovation, implementation, and scaling adoption of the DASCP framework. Then if we come over here to the Intellect EU's website where they talk about this, it says, Catalyst Blockchain Manager simplifies the adoption of the DASCP framework, delivering scalable, secure, and resilient solutions. Its modular infrastructure and advanced event monitoring ensure compliance with industry standards, enabling organizations to unlock the potential of digital asset securities and build a resilient, efficient ecosystem. In May, Euroclear, DTCC, and Clearstream released Building the Digital Asset Securities Ecosystem, demonstrating a strong commitment to fostering alignment among financial institutions on digital asset securities. We are pleased to see this publication prominently featured in the discussion at industry events this year, culminating in a compelling roundtable at Sibos back in October. A key challenge for financial institutions adopting digital asset securities is the lack of a formal framework. While the Digital Asset Securities Control Principle, or DASCP framework, is not a fixed rulebook, it does establish a foundation for a comprehensive industry standard. Guidelines for the development on governance and DLT-based securities will enable the industry to bridge the gap between the present-day reality and potential of digital asset securities as a driver of efficiency, security, and untapped value. Various risk prevention and mitigation controls within the DASCP framework have been the preoccupation of early adopters of digital assets for some time. Catalyst Blockchain Manager was designed for DLT-based solution enablement, serving many of these now better defined needs. As an infrastructure management solution, Catalyst provides accelerated deployment, streamlined blockchain application management, and full enterprise readiness, enabling organizations to focus on creating business value with distributed ledger technologies. We believe that Catalyst can play an important role in enabling a digital asset security ecosystem by streamlining innovation, implementation, and scaling adoption of the DASCP framework. And what's going to blow your mind is if you come over here and you look at the Catalyst Blockchain Manager, look at the blockchains and the protocols that they support. It says it right here. Fabric, Corda, Canton, Besu, Stellar, so Stellar's on the list, and Package Manager. There's no Xrpl here, okay? If you come over here to when this took place, this is the Digital Asset Securities Control Principles. or the DASCP from Euroclear directly from their website. And it says, we have collaborated with the DTCC and Clearstream with the support of Boston Consulting Group to lay out a blueprint for establishing an industry-wide digital asset ecosystem to drive acceptance of tokenized assets in a white paper titled Building the Digital Asset Ecosystem. And mind you, again, this is back from 2024. Now, if we come over here to the document itself, it specifically reads right here. It says, the primary objective of this white paper is to catalyze comprehensive understandings, foster collaboration, and spearhead further advancement within the digital asset ecosystem. The DASCP will serve as a baseline to help propel the industry towards standards. The move is designed to position the association to actively engage with the broader ecosystem. This involvement is crucial for the DASCP to serve not just as a set of guidelines, but as a dynamic catalyst that drives the conversation forward. The scope of this paper encompasses digital asset securities, subsequently referred to as DASs, as defined by a GFMA. Specifically, it includes securities, the utilization of DLT to represent or embody rights that utilize DLT, similar to those of traditional securities, whether they are issued directly on a blockchain, security tokens, or digital representations, i.e. digital twins of existing securities, all forms of equity debt derivatives. Now, if we come over here to more recent times, what just recently was announced. Now, if we come to more recent announcements, considering that was back in 2024, fast forward to December 2025, what did the DTCC announce for the first time ever? The DTCC and Digital Asset Partner to tokenize DTC custody U.S. Treasury securities on the Canton network. With this partnership, the DTCC plans for the first time, I highlighted that in blue, again, for the first time, to enable a subset of U.S. Treasury securities custodied at the DTC to be minted on the Canton network. The organizations are working towards an MVP in a controlled production environment during the first half of 2026, with plans to increase the size and scope of the projects in months that follow based upon client interest. The DTCC's participation and partnership with Digital Asset and the Canton network is a strategic step forward as we collaborate across the industry to build a digital infrastructure that seamlessly bridges the traditional and digital financial ecosystem and provides unmatched scalability and safety, said Frank Lasla, CEO of DTCC. This collaboration creates a roadmap to bring real-world high-value tokenization use cases to market, starting with U.S. Treasury securities, and eventually expanding to a broad spectrum of DTC-eligible assets across network providers. While the full DTCC digital asset and Canton network partnership roadmap is anticipated to unfold over multiple years, so this is not some overnight thing, the first phase aims to deliver tangible benefits to market participants by providing access to digitized financial instruments in a secure and regulated environment. This phased approach helps ensure flexibility and adaptability, allowing participants to adopt decentralized technologies while meeting regulatory requirements. Now, check this out. Our goal is to enable the industry and DTC partnerships to take advantage of tokenization capabilities that enhance liquidity, operational efficiency, and market transparency. We welcome the opportunity to partner with the Digital Asset and Canton network to bring the first production environment activity live, stated Brian Steele, Managing Director, President, Clearing and Securities at DTCC. This effort builds upon the DTCC's prior collateral mobility experiment. So this is literally going off of something that the DTCC already did. And if we go back to, here you see 5 months ago, the Depository Trust Clearing Corporation, the Great Collateral Experiment wasn't just a demonstration. It was a strategic preview of what is next. They literally told us this 5 months in advance. Okay. They told us this 5 months in advance. We come over here, we listen to Dan Donnie real quick.
As well as the technical components that went into the Great Collateral Experiment. Folks should realize this was real. This was not a made up it was real technologies operating in real time on a made up scenario. and not with real value. You should also note that DTCC is keen to bring these technologies to production. There's a substantial road given our responsibility.
DTCC is very keen to bring these things into production. And this is from 5 months ago. Now we fast forward to 2025 in December. Who did they choose to do this with? Canton Network. And it mentions directly in the statement that this is happening for the first time. It says it right here, multiple times. The first time. Right here and right here, just to solidify it. Now we come over here and you plug this article directly into ChatGPT and you ask it the question, in regards to the 2025 December report, does it mention it the first time? Wouldn't that imply that the DTCC is doing this for the first time on Canton? So any speculation that this has happened on Ripple's technology like the Xrpl would actually be incorrect. ChatGPT's response to that said, yes, explicitly. The key sentence is, the DTCC plans for the first time to enable a subset of U.S. Treasury securities and custodied at the DTC to be minted on the Canton network. What for the first time legally and operationally implies? In regulated market language, for the first time means exactly that. No prior production tokenization of DTC custodial assets, no previous live minting of these assets on any other blockchain, no prior settlement, custody, or issuance of these assets on Xrpl, Ethereum, or any other distributed ledger technology. If the DTCC had already tokenized custody treasuries elsewhere, they could not say for the first time. They would instead say expanding, continuing, or building upon prior initiatives. They didn't. Anyone claiming that the DTCC already did this on any other technology, including Ripple and the Xrpl, is factually incorrect based on the DTCC's own words. Here's why. The DTCC names the network. They explicitly say Canton Network. No ambiguity, no hedging language. The DTCC states for the first time minting, not first time on Canton, first time period for the DTCC custody treasuries. Regulatory constraints. The DTCC operates under SEC oversight. Misstating for the first time would actually be a material disclosure violation. They are extremely careful with the language for this exact reason. This does not mean Ripple has no relationship with the DTCC, as I mentioned. This does not mean Xrpl has no role in capital markets, as I mentioned, that in the future they could. And this does not mean that the DTCC won't ever use other networks, which again, I reiterated that they could. But what this does mean is that this specific initiative, this specific asset class, and this specific minting activity is happening for the first time ever on Canton Network. Anything else is a narrative, extrapolation, not evidence. So huge confirmation again, starting all the way back from showing you guys that the organization that planned to empower, says it right here, with Catalyst, we aim to empower the digital asset ecosystem by streamlining innovation and implementation and scaling adoption of the DASCP framework, literally allowed for a handful of different protocols to be utilized for this. And it says it right here, the supported protocols are Canton, Besu, Stellar, Corda, Fabric, right? The devil's in the details here, guys and gals. As we continue down the rabbit hole, we come over here, and I want you guys to directly listen to an individual representative from Intellect EU go on to talk about the Catalyst blockchain manager.
Start building on it or joining the network. From your experience, what are the biggest challenges the institutions face when they are evaluating the Canton, and how they can be solved, for example, with the help of Catalyst Blockchain Manager?
Yeah, sure. So here it's broader answer for traditional institutions, and honestly, even for crypto natives and those who've been in the sphere and enthusiastic about blockchain for years. Canton is still challenging in terms of technical side, evaluating technical side, getting familiar with how the protocol is built, getting relevant expertise in-house, and actually start being that familiar with that system, the ecosystem that you can actually trust and bet on the fact that you will have your nodes up and running with the most uptime possible. So in practice, that means having a strong engineering, DevOps team, security team. They should be capable to operate on Canton while meeting regulatory, security, and operational requirements, especially when this comes to not just simply the node as a service operation level, but more to the application build level. And when building the real applications and real use cases come into place, that should be a real strong setup. So like that, you can try to do that all by yourself, or you can just use Catalyst Blockchain Manager and Intellect.io team, which is the Catalyst Blockchain Manager is the software really created for the only purpose to ease the process of operating the blockchain infrastructure. And Intellect.io has been with the Canton and together with Canton from the very early bird and very beginning. So instead of setting everything up internally, institutions, companies, financial institutions, banks can really rely on a team with extensive experience that has been working with Canton for years, not even for months, for years. And Catalyst provides a managed production-ready environment with a strong focus on especially stability, security, and uptime, everything that any institution that builds on Canton and that wants to bring value on Canton will really value. The goal and our goal is and will always be is to allow institutions to build and participate in Canton while the infrastructure side is handled in a secure and reliable way.
Impressive. Another question I have is I saw a lot of tweets and LinkedIn posts of people comparing the Canton network to other chains like Xrpl. What do you think people misunderstand about the Canton network right now? Like, why do this all of these comparisons and discussions pop up?
Well, as you said, people always compare to the other existing and probably more popular or longer into space chains and protocols. But the very popular misunderstanding here is that people still may look at the Canton through the lens of traditional distributed ledger technologies and assume it's working the same way. In reality, as I already mentioned, Canton was designed specifically for financial markets where privacy, compliance, coordination, security between all the multiple parties engaged really matters. Canton was always focused on the real life adoption, not just purely participating and receiving, for example, rewards, though it was once a stage, not anymore. So again, continuing on that, the incentive model for the starters is different. It's not focused on Canton anymore on rewarding the infrastructure operators, but on encouraging the real life use cases and encouraging the real build. Building applications, transacting, creating actual activity on the network is something that is extremely valuable and is something that if you are ready to do that, if you're ready and you have your real life use case, Canton is your space to make it happen. That makes Canton really more value-oriented and aligned with how financial institutions think about utilities, practicalities, rather than just betting on receiving rewards for having your node live up and running.
So you all had that lady talk about getting their node operations up and running. You had Sandy Call from Franklin Templeton talking about running node operations, and that Catalyst Blockchain Manager allows for what two protocols? Stellar and Canton. And what two blockchains did Franklin Templeton choose recently? November 12th, 2025, Canton, and in previous announcements, Stellar from back in 2023. Then you come over here to what Sandy Call recently just said, as that lady mentioned, earning rewards through node operations, and listen to what Sandy Call here says.
In a wallet, a cryptographically protected wallet where all of our assets are going to be aggregated. And this is why they need to be tokenized, right? So that they can sit in the wallet and we can start to optimize and have that aggregation, not just an aggregated view, which is all we're capable of doing today, even with all the technology that exists. We just aggregate the view across all of our different accounts. We're going to actually have real aggregation, and these assets will sit side by side and be interoperable. And this opens up tremendous new opportunities for how to use those assets, how to create passive income from those assets, how to create active income from those assets.
So she just talked about generating passive income with your assets. She previously talked about node operations, and you've seen the protocols that Catalyst allows for node operations with. It all pieces itself together. Now, if we come back over here to the catalystintellecteu.com website, the next piece that I want you guys to focus on in the press room here is it goes on to say, we are excited about the conclusion from the Regulated Settlement Network, or RSN, proof of concept, in which the Intellect EU was a proud partner with Digital Asset, i.e. the builders of Canton Network, as the development partner and infrastructure provider via our Catalyst Blockchain Manager. So there again goes that Catalyst Blockchain Manager, which we know supports Stellar and Corda and Canton. This proof of concept explored how simultaneous 24/7 settlement for multi-asset and cross-network transactions can be achieved, incorporating tokenized central and commercial bank deposits, the U.S. Treasury securities, and other regulated assets. Now, if we come over here directly to the document from this RSN proof of concept, this is from December 5th, 2024. Let's take a really deep dive into this and really, again, question some things that are surfacing on the internet in regards to partnerships and what banks and institutions are doing behind the scenes. This silences it all because it tells you in detail. So the RSN aimed to promote interoperability across different tokenized financial networks with the goal of enabling seamless and efficient processing and settlement capabilities. Interoperability was a key element of the proof of concept, enabling the RSN to connect with other regulated third-party networks, ensuring that the process network transactions can achieve legal finality of settlement. This capability may enhance the efficiency of cross-network transactions and also support the settlement of securities, bonds, and other regulated assets across diverse networks and tokenized central bank deposits. As we continue to go on here and read, participants in the RSN proof of concept, look at this list of names. Citi, US Bank, JP Morgan, USDF, MasterCard, Visa, Swift, Wells Fargo, TDB Bank, Zions Bank Corp. Project contributors, right here it says BNY Mellon, Broadridge, DTCC, the International Swaps and Derivatives Association, the Mitra Corporation, Tacit Group, the Federal Reserve Bank of New York, Securities and Industry Financial Markets Association, or SIFMA. The advisors were Deloitte, InTouch, LLP, and then the technology providers were Digital Asset. That's it. None other. Just Digital Asset. Right? Again, that's Canton Network right there. Here it goes on to talk about all the use cases that the RSN working group tested. As we continue, it said, the result may provide the financial service industry with a common settlement infrastructure that is always on programmable and offers precise settlement capabilities to allow institutions to realize enhanced collateral and liquidity optimization. Remember this because we're going to come back to it. The proof of concept showed integration of multiple networks, enabling synchronized settlement across diverse platforms by leveraging interoperability solutions such as the Swift interlinking prototype and direct API integrations to the RSN, demonstrated its capability to connect with other DLT solutions and construct complex use cases involving the RSN as a settlement venue. It is likely an operational RSN could be designed under existing legal frameworks. The legal analysis did not identify any issues that would prevent the creation of the RSN as contemplated within the proof of concept. So again, remember, Digital Asset was the technology provider for this, so that therefore means that Digital Asset and the Canton Network have regulatory clarity under existing legal frameworks, which is huge. That highlight right there is absolutely huge. As we continue to scroll down and we read more thoroughly through this, it says, should these characteristics be maintained, the result might provide a public-private sovereign currency banking infrastructure for multi-asset and cross-network transactions. In addition to the tokenization of different forms of money, the RSN proof of concept also experimented with the tokenization of securities. Tokenized securities with the RSN FMI are assumed to have the same ownership rights as they do today. Theoretically, tokenized securities can potentially provide enhanced operational efficiency and automate more complex transaction logic via smart contracts. In the RSN proof of concept, the working group tested DVP use cases that include various securities, IG bonds, and US treasuries. And remember, what was announced, remember this RSN took place over a year ago. And if we come back to now more recent times, who did the DTCC continue to follow through and choose to do US Treasury securities on? Right? Canton Network. So this is proof that the proof of concept is now materializing into real live production. Okay. As we continue, it gets even deeper. So we come down here and it mentions the use case introduction, but this is where it gets very interesting because it says the use case also engaged with Broadridge and its distributed ledger repo platform to test how two RSN members that are also Broadridge DLR members use the DLR to initiate a 3-hour intraday repo to better optimize its tokenized collateral on RSN and be able to provide intraday funding to the settlement same-day trade obligations. This use case intended to show how the RSN's common settlement infrastructure, which contains various forms of tokenized collateral, could allow firms to seamlessly access and deploy its collateral and provide real-time liquidity through an intraday repo transaction initiated on Broadridge DLR. Now, so this RSN runs on digital assets technology, i.e. Canton Network, and Broadridge's distributed ledger repo platform that was also tested in this proof of concept also runs on freaking Canton, y'all. Don't take that from me. This is posted January 15th, 2026, only has 135 views, and this is an individual representative from Broadridge himself. This is Soto Sanchez. He is the chief product officer at Broadridge. Listen to what he says here directly from him.
We're also very much focused on sort of solutions that sort of help to sort of redefine existing workflows, but for a digital asset future, right? So what's the workflow for a wealth manager or an asset manager or a broker dealer, right, on the digital asset side, right? Because the workflows are going to change. It's very different. And so like, how do you support those workflows? I think that's extremely important as well. And then sort of another aspect that we're very much focused on is this interoperability aspect that I mentioned beforehand as well, right? So we're members of the Canton Network, which is a public permission network. And so our distributed ledger repo solution runs on the Canton Network. And so we do believe that interoperability, especially something like Canton, which is sort of purpose-built for financial services, right, to deliver the security, the privacy sort of that we all require, is the kind of solution that we're going to start to see sort of across the marketplace to just facilitate that, get folks on that common network as well.
Now, I want you guys to focus on the vocabulary he just used. He said, our goal is to get people on this common network.
Especially something like Canton, which is sort of purpose-built for financial services, right, to deliver the security, the privacy sort of that we all require, is the kind of solution that we're going to start to see sort of across the marketplace to just facilitate that, get folks on that common network.
And he specifically mentioned how their DLT platform runs on the Canton Network, on that common network. This is going to absolutely blow your mind. Elon Trades over here on X, shout out to Elon Trades. This is how I'm going to wrap it up for today. Said, why Larry Fink's once common blockchain commitment at Davos is almost certainly about Canton Network. And you just heard the gentleman from Broadridge talk about Canton Network and mention our goal is to get people over onto this common network, right? You cannot make this up. Here's what Larry Fink said at Davos most recently.
Tokenization and digitization of their currency. That's Brazil and India. I think we need to move very rapidly to doing that. We would be reducing fees. We would do more democratization by reducing more fees if we had all investments on a tokenized platform that you could move from a tokenized money market fund to equities and bonds and back and forth. We have one common blockchain.
Especially something like Canton, which is sort of purpose-built for financial services, right, to deliver the security, the privacy sort of that we all require, is the kind of solution that we're going to start to see sort of across the marketplace to just facilitate that, get folks on that common network.
To equities and bonds and back and forth. We have one common blockchain.
We have one common blockchain. If we come back over to this freaking document, y'all, remember the RSN, okay? December 5th, 2024. We already know Swift, DTCC, BNY, JP Morgan, Citi, all the big bank, Visa, Wells Fargo. Come on now, y'all. Like ISDA, the International Swaps and Derivatives Association. Who was the technology provider for this? Digital Asset. Remember, we go back over to Catalyst. Okay, don't forget, we started here. Catalyst mentioned that same thing. They are excited about the conclusion from the regulated settlement RSN proof of concept in which Intellect EU was a proud partner with Digital Asset as the development partner and infrastructure provider via our Catalyst blockchain manager. And we already showed the Catalyst blockchain manager provides support for Canton, Besu, Stellar, Corda, and we know that they chose Canton. Okay, y'all, you cannot make this stuff up. We come back over here to the RSN document, and what does it say? Look at this. If you type in common as a keyword here, it mentions it 33 different times. The hypothesis of the RSN is that combining the beneficial capabilities of a shared ledger technology with the positive attributes of the existing regulated financial services industry could lead to the creation of a common industry settlement solution, i.e. a common blockchain that serves the evolving demand of the financial services industry. Okay, this is huge. It says, should the above feasible, the RSN could provide an always-on interoperable and programmable industry-wide settlement infrastructure that could alleviate a number of existing risks and collateral and challenges faced today. And remember, this is the same document that mentions Broadridge DLT Platform and how the RSN utilized that as well in this proof of concept. I've now shown you guys how Digital Asset was the technology provider for this RSN proof of concept, i.e. the common blockchain proof of concept, right? It even says here, the result may provide the financial services industry with a common settlement infrastructure that is always on, programmable, and offers precise settlement capabilities to allow financial institutions to realize enhanced collateral and liquidity optimization. Broadridge is already utilizing Canton Network for their underlying DLT platform, their underlying DLT repo platform, which I also showed you guys. And the dude from freaking Broadridge specifically mentioned Canton and how their goal is to bring everybody over to this common platform. So back to this guy's post to wrap it up. You are hitting it right on the head, Elon Trades. Now, I don't know if you know all the information that I just shared with you, but check this out. Reading thoroughly through this, it says, at the World Economic Forum in Davos on January 21st, 2026, BlackRock CEO Larry Fink made a striking statement about tokenization. We must move more rapidly with crypto tokenization on a single common blockchain. While crypto Twitter immediately speculated about Ethereum or Chainlink, the evidence strongly points to Canton Network. Larry Fink said one common blockchain, not multiple blockchains with bridges. And it goes on to talk about all this stuff. I'm not here to debate all this. I'm just here to show you guys that this was 110% Canton Network that he was talking about. The DTCC's Canton selection and the smoking gun. On December 17, 2025, DTCC announced it selected Canton Network for tokenization of U.S. securities and treasuries. Why one common blockchain points to Canton? When Fink says we have more dependencies on maybe one blockchain, he's likely hinting at Canton without naming it explicitly. Consider, ETH and Link play roles, but for their institutional settlement of trillions in traditional securities, Canton is the only blockchain designed from the ground up for that specific use case. Every other blockchain forces institutions to choose between privacy or interoperability. Canton is the only infrastructure where Wall Street is building critical financial plumbing at scale. The DTCC partnership validates it as the settlement layer for tokenized treasuries. The bottom line is that if the DTCC Treasury tokenization goes to production in H1 2026 and Canton is the only chain they're using, which I already showed you guys in their own documents, they said that themselves, this is happening for the first time on Canton, no other blockchain for now, right? This is massive. And this 100% proves that what Larry Fink was saying in this video coexists with what this gentleman here from Broadridge was saying about how their goal is to bring everybody over to this common settlement platform. And he mentioned that's the DLT platform that they've built out that is on the Canton network. This is a huge video breakdown and just goes to show why I started doing deep research on Canton. Now, again, none of this is financial advice, and I'm not here to say that Canton is better than any other chain out there. I'm well diversified in this space. I have multiple different digital assets in my portfolio, and I believe the longevity of multiple different networks and chains in the future. But we need to come to reality with what things we speculate on by focusing on the documents. And the documents specifically state that the DTCC is choosing Canton Network for now, not Ripple, not Xrpl, not any other speculative chain. For now, it's Canton. So I lay my case to rest. Why I even started doing this deep research and digging into things deeper on the infrastructure side of things. As always, hopefully you guys enjoyed this video deep dive. None of this is financial advice. I'm not telling you guys to go out there and buy Canton or buy XRP or what else did we talk about? Ethereum or Link. Always do your own personal research. With that being said, that's all that I have for today's video breakdown.